market value added. Let's look at the detailed discussion now. Now, if you look at EVA, now what is economic value added? Actually, economic value added is a performance measure whereby we can check the firm's performance. This concept or tool is developed by Stern Stewart and Company. Now, this company has tried to measure the true economic profit produced by a company, or we can say that it is a registered trademark of Stern Stewart Company, which they implemented for large companies. Now, if we look at the actual meaning or actual terminology of economic value added, it is basically an accounting information system which will improve decisions and it will improve or rather motivate employees. But if we talk about its basic tool or basic assessment, in true sense, it is assessment of a company or its performance in the sense of economic profit. Now, it is popularly referred as economic profit. Why? Because it measures the company's economic success, how companies performing well. So what they does, they calculate their net operating profit after tax, adjust it with the help of weighted average cost of capital. So in short summary, it is a tool whereby company's performance can be checked. So it is also referred as company's economic profit. So this tool is actually a value based measure whereby we want to know how companies performing and how we can maximize shareholders wealth. So if we define in a short sense, it is an economic measure which uses economic profit to judge companies economic performance. Tool developed by Stern Stewart Company as a value based measure. So unlike previous tools like budgeting, it is focuses on ends not the means. So finally what we are achieving, they are focusing on the same because company survival or failure depends upon the results or outcome. So economic value added poorly focus on the means or the ends achieved by company. Now if we want to calculate economic value added, what is the process? Now what we does, we calculate net operating profit. Now, from net operating profit, we adjust taxes that will become net operating profit after tax (NOPAT). So, after adjusting taxes, now we have cost of capital. Now, this net operating profit after tax, we will calculate its present worth by using cost of capital. The cost of capital, it's your weighted average cost of capital. So, what we does, the process is first we calculate NOPAT, net operating profit after tax. Once we calculate net operating profit after tax, we divide NOPAT with weighted average cost of capital so that we get the present value of NOPAT. The present value of NOPAT called as economic value added. So we have three terms to use. Number one, net operating profit, then net operating profit after tax, then we have weighted average cost of capital, and then finally we got economic value added. Now if we talk about economic value added, question come how value is created. Now economic value added is the profit earned by a firm, naturally, because we are using net operating profit. Net operating profit is sales minus operating expenses. So we got net operating profit less the cost of financing. So we subtract financing cost like interest, dividend. The idea behind is that we get what value company is creating on their capital. So in true sense, economic value added is return on capital employed. As far as your return is higher than cost of capital, company is performing to be better in sense. So if we talk about why do we need it actually, this concept is needed. Why? Because number one, it gets me a knowledge about cost of capital. It gets me an idea for return on capital employed. Third, it gives me an idea how my company is performing comparing return with cost. Fourth, it get to know me about what is my net operating profit after tax, whereby company's performance can be easily checked out. So this concept believes that every performance measure there is a corresponding wealth measure. So this concept of economic value added basically uses the concept of wealth maximization. Now, if we talk about its basically implementation, various companies in India are implementing economic value added concept. It is not a new one. It has a successful history for its application. Now, so if we find why company need it, what are the company's benefit, we find that benefit may be near or distant. It has some kind of cost like direct investment cost and cost of capital, which we include as a part of weighted average cost of capital. So companies who are performing well, they got a better economic value added, whereby they got a competitive advantage or comparative advantage. Now look at the definition given by Warren Buffett. What he said: we feel noble intention should be checked periodically against result, meaning thereby if we calculate economic value added, we get to know where we are standing performance wise. So we test the wisdom of retained earnings by assessing whether retention over time delivers shareholder at least $1 of market value for each $1 retained, meaning thereby what money companies retaining, they should attain at least that much of market value. So this is actually an economic measure. If my company is investing money, they should create at least that much of market value so that company can be performing better. Now, if we talk about the concept, now it is much clear how economic value added gives a basic information. So ultimately, litmus test of any company's success lies in increasing its market value by more than its cost of capital. And here market value is used in terms of economic value added. So we get to know that we always compare economic value added with our cost of capital. So as far as economic value is higher than cost of capital, my company is generating a high amount of value now. Now, if we look at where it is applied, see it is applied or it is has some advantage in terms of cost of producing or distributing goods and services. Now, if I know what cost I am incurring and what cost I am incurring for production and distribution, I hope my company get to know my operating expenses. If I get to know my operating expenses, I have my revenue, I can easily calculate what is my net operating profit after taxes. Not only this, we have a better decision making power as well, because EVA provides for better assessment of decisions that affect my balance sheet, my income statement, and they try to trigger trade-off between profit and cost. That's the ultimate objective. That's in that way my economic value added start coming positive. Not only this, so we have one benefit cost, second benefit we have assessment, next benefit we have EVA covers all aspects of business cycle. So economic value added can be calculated or assessed at any point of economic cycle. Moreover, it helps us a speedy decision making concept. We can take or we can get easier concept or easier decision making power that helps the company to grow and succeed. So if we talk about your advantages, there are so many advantages like decision making power, speedy decision, cost comparison, we compare cost with the profit. Moreover, it gives a better assessment of decisions. Moreover, EVA also cover all aspects of business cycle. EVA decouples bonus plan from budgetary targets, so EVA helps us to make a better budget, better focus on bonus plans. And EVA eliminates economic distortions of generally accepted accounting principle, because EVA is not based upon any accounting principle. So they are away from economic distortions of generally accepted accounting principle. Traditionally, people thought that economic value added and EPS, earning per share, both are same, but it's not as such. EPS is calculated how? What we do? We divide the profit earned by us. So profit after tax by number of shares. We got earning per share. But while calculating economic value added, we keeps into consideration what? We keeps into consideration what is the capital employed by us and how much we are earning on them. then we discount them to present point of time. So what they does, they are not corely calculating how much profit they have earned. They are calculating what is the net profit after tax, and then they divide it with the cost of capital to find out what is the present worth of that money or that value creation, right? So we got that EVA is something a different tool and EPS is something different tool. Now if we talk about EVA, EVA is used by many more companies in India. For example, Coca-Cola, then AT&T company, IBM, Herman Miller. So companies are using starting from late 1980s, 1990s, and so on and so forth. That's it. That gets me clarity about my economic value added. So economic value added is a very wide concept which covers companies' economic performance, economic implementation, success, and their return on capital employed as well. Traditionally, people thought that firm value is only present value of cash flows. But if we talk about economic profit, no, it is not as such. What we do, we calculate economic profit and then we calculate their present value. And economic profit is what? It is net operating profit after tax adjusted for capital, right? So there's a huge difference between economic profit and your previous concept, your traditional measure. If we talk about types of and types of EVA. Now, before we go for market value added, let's take 4 M's of EVA. So, EVA is based upon 4 M's like measurement, management, system, motivation, and mindset. These are 4 core M's of economic value added. Now, measurement. EVA is a measuring tool which assesses companies' economic profit or economic performance. So, it is used as a measurement tool. Second, EVA is used as a management system. Why? Because EVA can give a company better focus on how they are performing and how they are behaving. That helps us company in making a better system for strategic planning, capital allocation, pricing, divestment, setting their goals, etc. So EVA is used as a measurement tool as well as management system. Now third, economic value added is also have a concept of motivation. So what Stern Stewart said, Stern Stewart designs cash bonus plans that cause managers to think like and act like owners. So what they does, they link economic value added with their bonus plan. How companies adding value, accordingly the bonus plans are declared. So what they does under EVA system bonus plan, the only way managers can make more money for themselves is by creating more value for shareholders. If company is creating more value added, yes, then bonus plan can be declared. So their bonus declaration entirely depends upon how much value they are creating. Next, fourth is your mindset. Now by going for mindset, what EVA does, when implemented in its totality, the EVA financial management and incentive compensation system transforms a corporate culture. So corporate culture has been changed. Why? Because the people are now looking for economic profit, cost of capital. So what they does, they put all financial and operating functions on the same basis. So they combined all information, be it operating, be it financial. Now based upon that they calculate EVA. So EVA becomes an effective tool which is a common language for employees across all corporate function. So EVA changes the mindset of employees and it is a framework. It's a framework, in effect a system of internal corporate governance whereby companies internally govern in a effective manner. So EVA gives us information. It's a decentralized decision making tool. So if I talk about 4 M's now, I have already discussed with you measurement, management system, motivation, and fourth is mindset. Now if we talk about MVA is a measurement of wealth. Now we find out economic profit. Now how much wealth we have created, that is a part of market value added. So the basic objective of market value added is the wealth creation. Now if we talk about market value added, is nothing. It is simply the difference between current total market value and the capital given by investor. How much value company is deriving, which we got through economic value added, and we subtract the capital contribution. We get to know how much market value we have created. Or we can calculate what? We can do economic value added divided by cost of capital. We get to know market value added. So MVA is not performance centric like EVA, rather it is wealth centric. So economic value added, we concentrate on value creation. Here we concentrate on wealth creation. So if we talk about MVA is slightly better. Why? Because it is based upon EVA information, and a high MVA indicates yes, company has created substantial wealth. If we have negative MVA, it means that capital is higher than the wealth created. So we have a negative MVA. So it's very simple. As said earlier, MVA is equal to value minus cost, or economic value added divided by 1 plus rate raised to power time. Here C is cost of capital. But for calculating MVA, only EVA is the basis, because without EVA understanding, you can't calculate MVA. So EVA is a value assessment tool and MVA is a wealth assessment tool. So this unit makes us clear what is economic value added, how do we calculate it, what is the need for EVA, which companies are using EVA in India, what are the benefits of EVA, how to implement it, what Buffett has said, and its traditional comparison with economic per share or earning per share. Then we find out 4 M's of economic value added. These are measurement, management system, mindset, and motivation. So this unit makes us a very much clear understanding how to assess companies' value using economic value added and market